Hello, Maverick traders. Welcome out to your market roundup. It's October 7th. Corey here with you. Let's jump in and have some fun. We're going to take a look at meaningful news in the markets. We're going to look at what sectors are heating up, which ones are slowing down, and then, as always, highlight our very best trade ideas for the week ahead.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
All right, so kind of an interesting day in that the markets reversed and finished pretty poorly. I mean, Dow, NASDAQ, S&P all down about 1%. Oil continues its upward surge. It was another one of the big stories of late, and it was again today, up almost 4%. So what's happening? Well, oil is surging on this Israel-Iran conflict. Expectations for some disruption of Iranian oil supplies and there could be bombings and more escalation ahead, and that's what the market's preparing for. In addition, we've got Hurricane Milton heading towards Florida, devastation on the way. This is problematic because it already hit there. There's already problems from Helene, and so on and on it goes. And you saw big reactions today in the markets in that generator stocks were up sharply, insurance stocks were down sharply, so they're anticipating more devastation. Advanced decline line, 72% of stocks down today, and the 50-day moving average, we've given up some ground. We still have 60-40 basically. Most stocks in an uptrend, but certainly not as strong as what we have been. So the S&P, I mean, this is not a bearish chart. This is bullish. This is a consolidation after a move to new highs. The question is well, if we get plungy here and we go back underneath this support, then you've got a full-blown correction and anybody's guess as to how far we go further from there. But if we just hang in this consolidation, no problem. I mean, it really sets up for more upside if you can hang in here. Now, we know that the NASDAQ has lagged. It certainly has not, it's not made new all-time highs where the S&P has. It's gone to new highs, recent highs, but not above the peaks from back here. So, where does the NASDAQ go? That's going to dictate a lot of what the market is doing. And the NASDAQ right now is just really wishy-washy and certainly in a zero type of pattern. As we look at the heat map, as you'd expect on an ugly day, there's a whole lot of red. You can see insurance is probably the hardest hit right there. Bright, bright red, as you can see. Some outperformers, NVIDIA certainly outperforming, Eli Lilly, Pfizer. There's a little bit of, strength in a couple of different segments, but for the most part, pretty much red has been spread throughout, as you would expect on a pretty ugly day in the market. So outlook-wise, I mean, you'd have to expect more consolidation here. I just think we're in a little bit of a waiting pattern, and I wouldn't be too aggressive one way or the other in the very near term until we get a little bit more clarification on what's happening. Having said that, there's always something to trade, and right now, I mean, I'm not going to be as bullish as last week. Last week I said my only bullish candidates were China internet type of names, and this was on a day when we had sold off. In fact, my first one on the list is still Alibaba. Here's where we were last Monday, and I said, look, it's an ugly day, but this thing is going higher in my expectations, and I threw out some numbers that probably seemed blasphemous with it at 106, saying it was probably going to 140s, 150s before it's all said and done. Well, we've gone from that 106 close last Monday to 117, so it's up 11 bucks thus far. I still think there's a lot more to go in these Chinese internet type of names, so pick your favorite, Baba, JD, what have you. Other potential candidates, I would look for things that we're up today in a down market. That's a good sign of relative strength and says, okay, well, it's not as much a problem with the current issues. And then I look at Caterpillar and we have a nice high base here that it's trying to break out of. So it's got some good characteristics. Notice the light volume during the consolidation technically looks pretty clean. So look for things with that type of relative strength. On the downside, look for things that are breaking to new lows that have been underperforming the market, and Foot Locker certainly fits that mode. We've been trending lower even as equities have been going higher generally. We've made new lows and broke some support levels today on increased volume. So letter FL, Foot Locker, not looking great. Ross Stores similarly has been trending lower for some time, broke some support levels back here. The downtrend persists, volumes picking up, probably going to go lower before it's all said and done. So markets are consolidating. I wouldn't put too much emphasis on trading the S&P or the Nasdaq. I would much more focus on just individual names. Volatility's higher, expectations for impending attacks on Iranian oil facilities and such, like we talked about. And then CPI comes out on Thursday. Now, the markets have switched. They're all over the place, but just last week they were pricing in a 50 basis point cut from the Fed at the next meeting. Boy, did things change on Friday's jobs number. That jobs number came in better than expected. Now people are saying, well, maybe they won't cut at all. If you look at interest rates in the markets, they're actually going higher, mortgage rates and so on, which is a little counterintuitive. The Fed's cutting rates and yet rates are going up. Who's right? I think the bond market, I think supply and demand, which is the rates you and I get based off of, consumer type of rates, are going up right now. So I don't think the Fed's going to cut aggressively at the next meeting. Delta Airlines, JP Morgan, Pepsi, Progressive, Wells Fargo. Whenever you get these financials like JP Morgan and Wells Fargo, that's the start of earnings season, and that's what this week is. So Friday truly kind of kicks off earnings season, and for the next few weeks, we're going to have a lot of reports from a lot of big names, so stay tuned for that. Hope you enjoyed today's market roundup. Have a great week, everyone. We'll see you next time.